Hello and welcome to The Real Estate Beat. I'm Amy Atkins.
Hey, and I'm Mike Meena.
And we're here to talk about what you need to know, all things mortgage and real estate. So today, Mike, let's talk about something that I know there is a lot of misunderstanding about, a lot of confusion about.
Yep, that reminds me of a song. There must be some misunderstanding.
And
Okay.
it's good. That's the perfect song for that because it's about reverse mortgages.
Yeah.
And there's so much people don't understand about them. So let's touch on that today.
Well, first of all, reverse mortgages can be done on a purchase money loan. So that's number one. The guidelines are a little tighter today when it comes to equity. So the reverse mortgage lenders pulled back maybe 3 to 4 months ago, maybe 6 months ago, with what they were willing to give out. So it used to be, say, a 70-year-old person could probably borrow 50% of the equity in the property. But today, it's probably a 70-year-old person can probably only get to about 45% loan to value on their purchase of the property. So that's number one. Number two, and probably the most important fact is, they're going to be able to live in that house with no payments, no principal and interest payments, or no interest payments for the rest of their life. Now, if they end up in a retirement home, they do spot checks to make sure that people are still living there. If they end up there, you're going to have to either refinance or sell. Or if once that person passes away, then the family gets to take over. They would have 6 months in which to either refinance or sell. You would get another 6-month exception to have another 6 months before you're going to have a foreclosure or anything started. So, that's not the thing. So what do the banks look at? So let's take a look, because let's just say mom and dad want to go ahead and they want to refinance their property, and their property's worth $100,000 to use it basically, and they're in their 70s, and they can get a $45,000 loan, or $1 million. They get a $450,000 loan, wherever you want to say. They get that loan. Every year, that loan amount is going to go up by maybe $2,500, call it $3,000 on the worst case it goes up by. But they have a $100,000 property. Property values have gone up by what? 5.6% per year on the last 70 years or whatever that is. So the property value goes up by $5,600. So we have the loan balance going up by 3 and the property value going up by 5 or 6. As long as things stay on the normal wavelength, we're going to be fine. You're still going to have equity at the end of the day. What's the dream here? Mom and dad don't have to make a payment. You're not having to give them money if that's the situation that you're in, or if that's what the borrower's situation is, where they don't have enough money to live. Now, how many people making $200,000 a year are getting a reverse mortgage on their house? Nobody. But the problem is when you're down to Social Security or Social Security and a small pension, and we've got $7 for a dozen eggs, then all of a sudden, what do we have to do? We have to find a way to survive. And that's all it is. They worked their whole darn life. Now, if they got to go ahead and they have to get a refinance done and do a reverse mortgage, that's great.
So is that across the board that they have 6 months? The children, the survivor, would have 6 months? And
so refinance or to sell, yes, 6 months.
And
but then they get the extension for another 6 months if they request that.
Okay, so that's a year. Okay, so Mike, just so we're clear here on this, the survivors, the children, let's say, of the property, they have to qualify for whatever the remaining principal balance is on this property.
So whatever the balance is at that point. So say, for instance, mom and dad lived in that property. They bought it for $100,000. They had a $45,000 loan. 10 years later, they pass away and they added $30,000 to the balance. It's $75,000 is what they owe right now. And their property in 10 years or that same period of time went up to $160,000. Now they have to figure out how to refinance that $160,000 down to the $74,000 or whatever they owe into that $160,000. They can go get a loan. There's a lot of loan programs out there, even if they don't qualify in a normal way, or they can go ahead and sell it. And remember, when mom and dad pass, there is zero taxable on that, because it's going to go to their stepped up basis the way things are written today.
That's a great point, yeah. The nuts and bolts of this are, and I'm talking to you as if, because I'm talking to them, you have 6 months after your parents pass away, then you can put in for an exception for another 6 months,
yes.
right? You just have to qualify for the remaining principal balance.
Correct.
Okay. So these are all things that a lot of people don't understand about a reverse mortgage. You say that word because I've had conversations with people about it, and you see their eyes get big and they get scared like, oh, well, I don't want to do that. That means mom and dad are going to lose their house.
Mom and dad are going to lose their house.
Right.
Absolutely they are. Yeah, no, they're not.
Okay.
First of all, mom and dad can't get kicked out. And sometimes it's a selfish situation, obviously, with the kids going, well, I want to keep as much equity as possible. Well, if you're paying for mom or mom and dad are suffering, they're like the chickens that were in the coops too tight, and that's why eggs are $7 a gallon or $7 a dozen. Did you know that?
I did, of course, yeah.
Yeah, of course.
I buy eggs.
Eggs are $7 a gallon too. That would be great too. But needless to say, no, it's one of those situations you don't want mom and dad cooped up and not able to do anything. So they work their butt off their whole life. Like I said, let them have the loan that they need to get through, and let's work a little harder at our age to get where we don't need to make mom and dad not have a reverse mortgage.
So if people have questions about reverse mortgages or they've heard rumors or whatever, they can call you. You will tell them the truths about this.
Here's a fun fact.
Great. I love
You
fun
like
facts.
fun facts?
I do.
On a Canyon View estate, okay, well, say for those of you on properties on leased land, you can do a reverse mortgage as long as there's 50 years remaining on the lease when the buyer is 100 years old. So they just want to guarantee themselves if someone lives to 149, they're still going to be able to have that lease intact, and they can go ahead and sell the loan.
Does that happen a lot?
I don't think people live to 149 yet.
No. So,
Okay.
that's a
I
good
just
rule.
thought that was a fun fact.
That is a fun fact. So, anyway, if you'd like to know more about reverse mortgages, guys, Mike is an expert at it. There are so many really bad information out there about it, or rumors or whatever, that's just wrong. And people like to scare people because a lot of people don't want you to get into a reverse mortgage. But, right here, you can look into it. You'll get the facts. You'll get them straight and see if that's the right option for you.
Yeah, and the older you are, the higher your equity position can be. So if you're 80, maybe you get to 50% of the appraised value. If you're
Good to know.
90,
Yeah.
you might get to 60% of the appraised value. But the banks are very conservative on those values right now. And when interest rates are lower, you actually get a little bit more than when they're higher. So that's it.
Great information on reverse mortgages. We'll actually maybe try to put a graphic here for you so you can look at it. And if you have any questions, give Mike a call here at Augusta Financial. Thanks for watching The Real Estate Beat, and we'll see you next time.
See ya.